Well, the first is the industry at the moment is on a high. It's got high prices, everybody's making good money, there's real confidence, and with that comes actually a desire to grow and invest in this industry. What comes with that is a real frustration that's coming and permeating through, and that is really the bureaucracy and the regulation that it takes and the time it takes to get approvals to do things in this industry. It can take up to 10 years. Now that's costly, time consuming and frustration. The second thing is really that comes through is really the perception of does the communities in Melbourne and Sydney really truly understand the total value of the mining industry to the Australian economy. Not just the big exports, it's not the things flying out on the boats, but actually what happens here, the ecosystem, the truck drivers, the suppliers, the professionals, everything that contributes. So their concern really is, does the Australian economy and the Australian community really fully understand the total contribution the mining industry has to the Australian economy?
Our customers are really focused on three key things at the moment. We see them still very much focused on costs and the productivity gains that can be made through the investment into both data and technology. So there's considerable investment taking place there. The second thing is they're very concerned around power and actually the access to cheap and reliable power. So we're seeing them invest further into the renewable energy market to help supplement the baseload power that they currently receive. The third thing that they're focused on is actually this acquisition and consolidation of the industry that continues to take place. We saw that in relation to Beach Energy's acquisition of Lattice, and you've now just seen it with Mitsui's takeover of AWE. We believe this consolidation will continue to occur. We also see that there's going to continue to be a sale of non-core assets by the major companies. For example, Rio Tinto has currently sold off its coking coal assets in Queensland, and we see there's going to be further opportunity around that area of the market as well.
The outlook is confident. You know, current prices are high, current demand is strong, and all the forecasts show that that should continue. However, this needs to be considered in the light of this transition to a lower carbon environment, and also the challenges of the current views and the future views and expectations of society.
So the sector is looking quite positive. We believe that the commodity prices will continue to stabilise and there is potential opportunity to grow as well. We see the sector is going to continue to remain profitable, and the reason why is obviously now that they've got their costs in place, the lower costs with the higher commodity prices drives a greater margin through the sector as well. One thing that we see the clients balancing though is this investment in further supply, because obviously they don't want to put too much supply into the market because it will actually dampen commodity prices, but then they also need to invest for future growth. So we're starting to see them look at this investment for future growth, whether it be in existing assets or actually further exploration in the market as well.